Hey everybody, my name is Alex Merced from alexmerced.com. Lately I've been talking a lot about cryptocurrencies because it's become, every once in a while, my focus, my interest, my passion changes from music to politics to technology to all sorts of different things. So right now I'm kind of going through a cryptocurrency phase, and it's good to learn a little bit about everything. A good side note, a good reason to know a little bit about everything is that it just makes you that much more enjoyable person, because then you always have something to contribute to every conversation. So just because it's not your passion, it's not something that you want to know, it's good to know a little bit about everything. But what happens a lot of times when you start talking about cryptocurrencies, a lot of people are very passionate about particular investments, whether it is stocks, whether it is metals, foreign currencies, certain cryptocurrencies, etc. People get passionate, and then when you say, hey, here's a interesting thing that maybe you want to invest in or participate in or learn more about, people get defensive. They're like, no, well, gold is the best way to do things. Or no, buying foreign currencies is the way to go. Or buying stocks or bonds or whatever the asset, real estate, is the way to go. And bottom line is, it's not just one right investment, okay? I'm not, and again, full disclosure, I am not currently a professional licensed advisor. I'm just some guy on the internet spouting his opinion at the moment. I've been licensed in the past, I may be licensed in the future, but currently I don't operate in that space. Aside from just training people as my full-time job to pass licensing exams. Full disclosure. But bottom line is, diversification is a good thing, meaning don't put all your eggs in one basket, because if you've studied economics, different things move up and down in prices due to a variety of reasons, whether they be interest rates, the profitability of an enterprise, what's going on in a relative economy versus another. Okay, so bottom line is, every asset has its days, its good days and its bad days. So this is why generally diversification is always something that's sort of promoted as an investment strategy, because, and again, it's not just diversity of having lots of different stocks, but a lot of different asset classes, having life insurance policies, having cryptocurrency, having metals, having different foreign currencies, having different stocks and bonds, having a little bit of everything. And then again, even within those particular asset classes, so a little bit of term versus whole life versus universal life, a little bit of REITs versus preferred stock versus common stock, different sectors versus having gold, some gold ETFs versus having some physical gold in your house versus having crypto gold via cryptocurrencies like BitGold and BitSilver, which are backed by gold and silver, having cryptocurrencies, having a little bit of Bitcoin and Litecoin, having a little bit of Ethereum and Stratus and Neo and Waves and all these other cryptocurrencies, having a little bit of Swiss francs versus Australian dollars versus having euros and all sorts of other different foreign currencies, and then again holding them physically versus holding them through a financial intermediary. So the way you split up your investments there's infinite methods of doing so, and there shouldn't just be sort of one way of doing it. Now, theoretically, if I had perfect foresight and I knew exactly what's going to triple this year, I just put all my money there. I mean, if I knew Bitcoin was going to do what it did over the last couple months, I would have put every penny I had back in January. But we don't know that, so that's why sort of diversification is a thing. Now, is diversification appropriate for everyone in every situation? Not necessarily. Again, that's why you should talk to a licensed financial professional who can kind of guide you through your specific situation as far as investments. Although, again, your traditional financial planner is going to more speak specifically to life insurance, securities investments, stocks and bonds, and traditional financial instruments. So not as much about sort of currencies, metals, cryptocurrencies, but the same principles do apply. Okay? And same thing with trading. And then if you're someone who used to do a lot of trading in stocks, I mean, the stock market trading has become overrun with algorithms, which is not a bad thing. Innovation is good. But, right now the cryptocurrency market is done a lot through sort of more manual trading. So a lot of those old technical analysis principles apply there and still apply there. And same thing to an extent with foreign currency markets, even though that has algorithmic trading going on as well, and depending on the market. And there's all sorts of, the financial markets are very interesting and diverse, and cryptocurrencies have created a whole new alternative financial system with loans and different currencies and different platforms and different vehicles, etc. It's only another place for you to diversify. And again, there's even other places as far as like physical goods, like, there's preppers who stock rice, because I mean, if you have a zombie apocalypse, probably you're going to get much further trading rice and food than you would trading anything else. Okay, there's people who stock up on actual physical real estate, who stock up on collectibles. There's all sorts of different things that possibly have value in certain situations. There's people who buy art, just people who buy all sorts of things. There's musicians who make their money by creating music, and to them, their creativity is their currency. Bottom line, though, is diversify if that's appropriate for you. And there's nothing wrong with thinking that there's more than one possible place to invest your time and your money. But again, you got to figure out what your goals are, what risk you're willing to take, and do the proper due diligence to figure out what it is. Like, for example, I invest in cryptocurrencies, but I don't put more money in cryptocurrencies than I'm okay with losing, because I understand it's a very volatile, a very new market. That should go for any investment. Figure out what it is that you're sort of okay with losing and go from there. I'll see you guys later. Have a great day. Bye.